Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Coupang. So Coupang is a South Korean e-commerce player, and we're going to talk about its valuation, we're going to talk about its growth rates, particularly now that the stock is trading close to its all-time lows. So let's just kind of dig in here. So one thing that I find quite interesting is the market has started to be quite discerning. So if in the first part of 2021 a lot of the stocks, the kind of high growth names really deflated, and if you follow the space you'll have seen that, but starting August we can see the market has been a bit more discerning. So for example, I highlight here Mercado Libre. So Mercado Libre is a company that just is growing at an insane growth rate, and it posted 4% net margin. So the market just said, okay, we're confident that's going to be around for some time. Bang, the stock got repriced higher. Similarly, you can see JD.com when they reported that we're able to still grow at that mid-20s growth rate. Many investors have been thinking in the background that JD.com was going to be growing at just kind of low 20s. So when they were able to grow at mid-20s, the stock just really kind of just took off also. On the other side of the equation, you can see the Coupang investors are kind of like, okay, is it really going to be sustainably growing at a reasonable rate? So here's the thing, right? You can see here in the graph that in H2 2020, the stock was the top line was growing at approximately 95% year over year. Okay, and over those 2 quarters, you can see that. And then as we came into Q1, it really dropped. It dropped by this more than 2,600 basis points. So investors are kind of like, does this company, is it stable, the growth rate? That's really the question, particularly as we're going to come up against that really heavy comp from last year. So in that mind, investors are like, can this be growing at approximately 60% or higher, or is it going to be starting coming to lower towards 50%? If it comes towards below low 50%, investors are going to be ruthless towards the stock. So the one thing that I find quite interesting is that Coupang has this side project that is investing in aggressively, including Rocket Fresh, which is a grocery avenue that it's investing in, and Coupang Eats, like Uber Eats, kind of thing, and that's growing really, really fast. So in the case of this, its grocery opportunity, it now makes up 11% of its total revenues, and in the case of its Eats, we don't really know, but it's probably below 10. It's probably below 10% of the total business. But these 2 opportunities are really kind of delivering very strong triple-digit growth rates, and in the meantime, Coupang is not really that negative. So you can see here its EBITDA margins, I'm not sure if you can see here in the screen, have been approximately kind of oscillating around the 2-point-something%. And if you look at Q3 last year, that was the most negative, and it was at negative 3.8%. However, we started into Q1 this year, it was at negative 3.2, and then Q2 was negative 2.7. So there is a progression, slight progression this year, that it's showing that as the economies of scale are improving, its path to profitability is also starting to improve. So this is really the question on investors' mind. Can the stock be growing at approximately, close to 60% while not incurring heavy losses? That's really what investors want to see. So I gave the example before that in the case of JD.com, that stock, it might not be growing that fast, but it has an 11% free cash flow margin, so it's very free cash flow generative. The other example I wanted to highlight is Mercado Libre again. Investors are really salivating over this, and they're paying up 10 times forward sales for this company because they're just very, very confident that the company is growing at close to triple digits while being profitable. So again, if you can show to investors that you are profitable, you do have a stable business, investors are rewarding that. So right now, investors are kind of, okay, I'm not willing to pay a lot more than 2 times next year's sales for Coupang because I just don't know how it's going to be growing into next year. But I'm saying that, if they can show as it comes around to the next quarter in Q3 that's going to report in a few weeks, if they can show that they're going to be growing at approximately kind of 60% while not incurring heavy losses, I suspect investors will be very quick to reprice it high, and I may even come in and change my opinion on this and become a bull here. But anyway, if you want to find out what kind of stocks I'm investing into right now, don't forget to check out my marketplace. It's called Deep Value Returns. I tell you the stocks I own and why, and you're welcome to do a totally free trial to see if it suits you, and you're not going to get charged anything at all. if you unsubscribe anytime before the 14 days. I'm really a place for you to kind of, if you're new to investing or if you've been investing for some time but you're looking for a source of ideas, you come in, check out my marketplace, make sure you read the reviews on my platform, and I hope to see you next time. Bye bye.